All right, welcome. Today, we are pulling back the curtain on a trading strategy that is hiding in plain sight. This is something the big institutions, the so-called smart money, use every single day to their advantage. And by the time we're done here, you're going to understand exactly how they do it. So let's just dive right in.
So let me just ask you that straight up. What if a strategy like that actually existed? You know, a single framework that works not because of some crazy bull market or a terrifying crash, but because it's literally built into the DNA of the market itself. Well, that's exactly what we're going to unpack today.
Okay, now before we get into the really good stuff, we have to do the quick, important disclaimer. Everything you're about to see is for educational purposes only. This is not, and I repeat, not financial advice. Trading involves very real, significant risk, so please, you have to do your own homework, always.
To really understand why this strategy is such a game changer, we first have to look at the problem. We got to be honest about the game that most retail traders are stuck playing, and unfortunately, the game they're losing.
And yeah, that number, it's a gut punch. The hard, cold truth is that somewhere around 90% of retail traders lose money. But here's the thing. It's not because they aren't smart, and it's not because they aren't trying hard enough. It's because the tools and strategies they're given are, frankly, broken for most market conditions.
So why do they fail so often? Well, think about it. Those breakout strategies, they look like magic in a strong trend. But the second the market gets choppy, they get absolutely shredded. And buying the dip, man, that feels like a genius move, right? Until that dip just keeps on dipping and blows up your account. And the classic indicators, your RSI, your MACD, they're lagging. They're basically telling you about a party that ended an hour ago. By the time they give you a signal, the smart money is already cashing out.
And all of this leads to a pretty crucial realization. If you've ever felt like the deck is stacked against you in the markets, well, it's because it kind of is. Wall Street is playing a totally different game, with a set of hidden rules that most people never, ever get to see.
Honestly, this is the best analogy there is. Most retail traders are taught to play checkers. We see a simple pattern, we make a simple move, usually based on old lagging information. Meanwhile, Wall Street is over there playing 3D chess. They are thinking 10 moves ahead, not by predicting, but by reacting to the real-time flow of money and actively targeting specific price levels where they know we are.
So how do you stop playing checkers and start seeing the entire chessboard? How do you flip that script? Well, the solution, my friends, is a powerful concept called liquidity mapping.
So what is it? At its core, liquidity mapping is not about having a crystal ball. It's about becoming a market detective. It's the simple practice of identifying where huge pools of orders, like everyone's stop losses or big options positions, are sitting, and then just watching and reacting as the market naturally moves towards them.
Think of it like this. Price doesn't just wander around aimlessly. It moves with purpose. It's drawn to these massive pockets of liquidity like a magnet. Your job is to stop guessing where the magnet will pull next, and instead just learn to see the invisible footprints that the big money leaves behind, and then follow them.
Okay, so that's the what. It sounds cool in theory, right? But the million-dollar question is, how does this actually work in the real world? How do you read this invisible map of money? Well, it actually boils down to a really clear 4-step process. First, you identify. You're like a scout, pinpointing where all the orders are likely clustered. Think about obvious spots below support or above resistance. Second, you anticipate. You don't jump the gun, you wait for the market to make its move into that zone. We call this a liquidity sweep or a stop hunt. Third, and this is absolutely crucial, you confirm. You need proof it was a trap. You use a truth detector, like watching the price quickly reclaim the VWAP, to confirm the move was fake. And finally, only after you get that confirmation, you execute, entering your trade with a clear plan and defined risk. Let's make this super concrete with a quick case study. Imagine you're looking at the QQQ, and it's trading around $529. Your liquidity map is screaming two things at you. There's a giant pile of retail stop losses sitting just below $525, and there is a massive options wall at $530, acting like a ceiling. These are your two liquidity pools. Now here's the beautiful part. We're not betting on which way it will go. We don't have to. We're ready for either outcome. In scenario 1, the price takes a dive, grabs all those stops below $525, and then, bam, violently reverses back up. That's our trigger to enter calls. But in scenario 2, price tries to push through $530 and just gets smacked down, with sellers piling in. Well, that's our signal to ride puts down toward that lower liquidity zone. See? Two completely different outcomes, but we had a plan for both. No guessing required.
Once you start to see the market through this lens, your entire mindset shifts.
It's a total paradigm change. You stop being the person whose orders are the target, and you start thinking like the person who's doing the targeting. You become the hunter.
And you know what the absolute best part is? This approach is evergreen. It's timeless. It works because the fundamental game of the market, the hunt for liquidity, never ever changes. The only thing that's different from one day to the next are the specific price levels where that money is hiding.
And this works in literally any market condition. In a raging bull market, price is constantly sniffing out the liquidity sitting just above key resistance areas. In a nasty bear market, it's diving for the liquidity sitting just below support. And in that awful, sideways, choppy market that destroys most strategies, it becomes a playground for us because price just hunts liquidity on both sides, giving us opportunities where everyone else just sees noise.
So ultimately, this whole thing is about a transformation. It's about deciding if you want to be the hunted or the hunter. The hunted trader chases every shiny new setup and in the end becomes the liquidity for others to take. But the hunter has a map of the terrain, reacts to what the institutions are doing, and waits for confirmation. This is the real shift from playing checkers to playing chess.
So I'm going to leave you with a challenge. The very next time you open up a chart, I want you to actively resist asking yourself, is this bullish or bearish? Instead, I want you to ask a much more powerful question. Where's the liquidity? I promise you that one simple shift in focus will change absolutely everything about how you see the market.
And hey, if this explainer gave you a light bulb moment, if it helped you see the market in a new way, do me a huge favor and support the channel, Elite Trade Radar. Smash that like button, subscribe, and share it with someone who needs to see this. We decode these hidden tactics every single week to help you learn to trade with real confidence.
And for sure, make sure you turn on those notifications, because you honestly never know. The very next explainer we release might just be the one that flips the switch for you and changes your trading forever. Thanks for watching, and I'll see you on the next one.